Hello and welcome to Business Today. I'm Siddharth Zarabi and with me Prashant Kumar, the Managing Director and CEO of Yes Bank. Mr. Kumar, a warm welcome to Business Today. Thank you very much for your time. A very good set of numbers this quarter. Profit up, provisions are down. Take us through the key highlights.
So thank you so much, Siddharth. And not only this is the first full year when bank has come back to the profit after 2 years of the losses. But I think the most important part that quarter after quarter, we are able to demonstrate a sustainable and improved performance. And this gives us a confidence that going forward also this trend would continue. And what we have seen in terms of good profit numbers, it has been supported by two major things. One is in terms of expansion of business and the net interest margin. And the second also in terms of our recoveries and upgradation. So both in terms of business growth, which is helping us in terms of interest income, and also in terms of recovery and upgradation and a full control on the slippage. So our asset quality is improving continuously quarter after quarter, and the business is growing. Similarly, we have seen the good growth on the CASA deposit. CASA deposit growth is actually 44%. Which is something highest in the industry and which is helping us in terms of reducing our cost of funding. So I think this momentum would continue and we are targeting a loan growth of 15% for the FY23.
Mr. Kumar, since your NIMs have improved substantially on a whole year basis, what's the outlook for the current financial year?
So we would be exiting, say, FY23 of NIMs of around 3% minimum. And the whole year NIMs can be around 2.75. But I think the way the things are improving, we would be exiting around 3.
Mr. Kumar, one of the other aspects of your results is that while your gross NPAs are down, they still at 13.9% are still at a higher level. How is the outlook on that? And while I completely understand that recovery is not easy, especially in challenging, volatile overall business environment, what do you personally see happening on this front? And by when do you expect them to come to your own personal targets that you may have set for non-performing assets?
So I think this issue has to be seen in the context of what we inherited and where we started the journey 2 years back. So I think this bank came into problem because of a very, very large NPA pool. And last 2 years, we have been able to recover and upgrade more than 13,000 crores. And despite COVID in last 2 years and the uncertainties, we have been able to contain both slippage and continuously reduce our NPA. But I agree with you. That it takes a longer time in terms of even the current NPA number. So what we are trying to do to form a ARC and where we are at a quite advanced stage. And once that happens, we would try to transfer the entire pool of stress asset to this ARC. And then bank would be having almost like a zero NPA.
Mr. Kumar, on the ARC, is the hunt for the external partner, at least that's what we had heard earlier. Is that over? Is there a timeline you can offer us?
So I think the process of the evaluation of the partners is almost at the final stage. Okay. And in terms of identification of partner and the culmination of the transaction, we are quite hopeful we would be able to do it within June quarter.
Mr. Kumar, a broader question, not just on the immediate numbers. This is to do with the overall success rate of ARCs that the industry is saying. I'm not just talking about your bank. Yeah. And a quick comment, as far as IBC recovery cases are concerned, and I'm sure you have a bunch there, are things looking okay? Are you okay with the haircuts that are happening?
So I basically, if you see in terms of some of the haircuts which we are seeing, I think it is not good for the banking industry. Ultimately, it's a public money. Okay? So if some of the resolutions are happening at a haircut as high as 80-85%, then ultimately we are losing money for the public. So I think this is something which is not good, definitely. But I think this needs to be addressed. This needs to be addressed, and that can happen only if the process of the resolution happens at the earlier stage. And definitely also with the reforms in the whole legal system and how the entire IBC process works. So I think if that happens, and if the banks takes those assets for the resolution at an early stage, then I think recovery would be definitely better. But just to share with you, like I think within our bank, we are seeing a very good recovery. We have not seen that kind of haircut. And I think that also depends on the dedication and the perseverance of the bank. So out of say 13,000 crores of recovery and upgrade, we had a positive impact of almost 40% of that. And that shows that actually recovery is much more than what we have provided for.
Mr. Kumar, let's move to the broader economy and starting with credit growth. We saw the economy come out of COVID and growth, pent-up demand came back. Then there was a bit of a dip. And now we see that cost pressures and inflation have seeped across all sectors of the economy. And while revenue collections for the government seem very big, it's actually attributable to a significant extent to inflation. How is the current economic environment, if at all, impacting your own credit growth? What's your own outlook, and where do you see we are headed in the next couple of quarters?
I think there are a lot of opportunities for credit growth, because on the corporate side, last year the corporates were banking more on the market. They were not borrowing from the banks. They were borrowing from the market and repaying to the banks. But now with the change in the interest rate scenario, I think corporates are again coming back to the bank. So I think there is a huge potential available. And the factor you mentioned in terms of inflation, because of this inflation, the requirement of working capital of the corporates, they are also going. So I think we need to be cautious, and also on the retail and MSME, because there is a lot of demand. But due to inflation, input costs, and everything else, I think everybody has to be very, very selective for the customers. If we do the right set of customers and if we are able to capture their cash flows, then I think there are good opportunities.
Mr. Kumar, how is what sector is really, according to you, leading the credit growth uptick, although it's not uniform across all lenders? What sectors do you see as performing well, and therefore by default focus areas for your team as well?
So one thing is absolutely the infrastructure, but along with the infrastructure, we are also seeing on the chemicals, the engineering goods, we are also seeing the similar thing on the health sector. And I think the kind of push which government has given for the PLI scheme, so there is a lot of now shift the manufacturing capabilities within the country. And I think this Atmanirbhar Bharat and the PLI schemes is giving a lot of boost for setting up the manufacturing issues. So I think both on the manufacturing as well as on the services side, there is a huge potential.
Mr. Kumar, again, a broader economy-related question. The struggles of our small and medium enterprises are well documented, and that kind of feeds into issues for even large cap sectors across companies across the economy. Your own sense, what you pick up from the ground, from your line managers, about are there struggles over, have they readapted to changing economic conditions, tax rules, and even the lending squeeze that happened? Have things changed for that sector?
No, I think there is a lot of improvement, and the good part is like our MSME units, they are adopting to the new rules. So I think there is a huge compliance on the GST, huge compliance in terms of how they maintain the books. And this compliance actually helping them in raising more money from the banks. And banks are also comfortable with those MSME units who have already adopted to the new things. So I think this evolution is not only helping a better compliance, but is also helping them to avail better finance from the banks. But definitely the challenge in terms of margins, pressure on margin, input cost, inflation, that is something which we need to be watchful. And that's why everybody need to move that ladder in that direction.
What are your own thoughts about the interest rate cycle? It has turned clearly, and individual banks are responding. The central bank will also respond in due course of time. Your own thoughts?
No, I think it's a very, very clear that interest rate would start moving northwards. And maybe in the current financial year, we would be seeing increase in interest rate maybe from 50 basis point to 75 basis point at least.
A quick final couple of questions, and this has to largely do with those viewers who are your depositors, who save with you, who have banked with you for years. Tell them where the bank stands, because there was a brief period of loss of confidence, and it's kind of fed into a lot of negativity, perhaps. Where is the Yes Bank turnaround story today? Is it complete, or is there work still to be done?
So first, I would like to thank all our depositors who actually stood by us during the difficult times. But I can tell everyone the story of Yes Bank in terms of revival. I think that we have been able to take care in last 1 year. Now it's a growth phase. Today we are adding more than 1 lakh CASA customer every month to the bank. And that shows the trust and the confidence which our customers have in us. So every month we are adding more than 1 lakh saving bank and current account. Bank is absolutely on the growth phase. Everything has been taken care. If you see all the financials, whether it's a business growth or the profitability, it's a quarter after quarter, there has been a very, very steady improvement. And on the asset quality side, things are absolutely under control. Our recoveries are much more than the credit cost on account of slippage and the aging problem. So in a nutshell, I can assure you, your money is absolutely safe, and you would be having a very good experience as a customer, both from our digital offerings and also our services available by our employees.
One quick point, your own plans to raise equity capital to sustain the growth and build on it?
The current capital is sufficient to take care of our growth aspiration for the current financial year. But I think due to the uncertainties in the outside environment, it is always good to have a buffer on the capital. So today our CET is around 11.5. We would like to take it to 13.5 to 14, where the balance sheet would become very strong. So in the current financial year, we would try to explore those means where we can raise some capital and further insulate our balance sheet from any uncertain external shocks.
Well, I'll wish you all the very best for that. Prashant Kumar, the turnaround man at Yes Bank, from depositors as well as investors, all the very best for the future. That was the MD and CEO of Yes Bank with us. If you have, thank you very much for watching.
Thank you so much.
If you like the video, do like, comment, share and subscribe.